Hello friends, I'm Rocky Outcrop. This is Bitcoin Technical Analysis. Thank you so much for joining me. Let's just dive straight on into the charts here. This is the spot pricing that I've got up behind me. The Bitcoin US dollar chart, of course, by Bitstamp. And we can see on the charts here that we have a high coming in. This is the 1 hour time frame. We've got a high coming in at the minute that it looks like it's managed to get up above this previous high over here on the 13th. Yesterday, and it is without that divergence on the 1 hour time frame across all of these oscillators down below. So that's quite good. Now, when we look at this as well, that's the story is obviously of a green day today, but there's a few concerns that we could have, and I suppose you could sum them up by just diving over real quick to Ethereum, which will have its own technical analysis video, by the way, published by me later on today. Just after, but well, actually probably just before this one comes out. You can see that we've come up here and we've had a green day as well with regards to Ethereum, but if I just go up towards the 20, we've had a green day. If I go up towards the 24-hour timeline, are we seeing Ethereum prices kind of leading the way, and is Bitcoin just kind of catching up in this negative kind of top here that we have, which is a bearishly divergent top between it's not bearishly divergent, it's bearishly convergent. Without any bearish divergence on any of so is this structure here without any divergence where we see a turnaround of the trend so far? Is this just ultimately a lower high having come in here and been rejected by the 50 simple? And that's what we're asking. Is it leading the way in terms of that type of mentality there, come up and being rejected by it, having come down and tested this already, has happened over the weekend? So if we just dive back over to the Bitcoin pricing, we can see that we've come up here and we're just now trying in at this 21 EMA, whereas over there we're tried that just a couple of days ago. So you can see that maybe, if that's leading the way overall, then maybe we see a pullback from one of these areas, and we'll ask a couple of questions then about whether or not there's anything negative really showing up for us overall. But at the minute, it's been positive price action, and that's been good to see. We're a little bit shy of closing up where you kind of would want to see it happen in terms of getting full kind of positivity on the go, but at the minute, things have been going along okay, as we are 5% up, on the 3% up on the day so far, right? Okay, but we have a couple of negative things as well. Just diving back down the 4 hour time frame, then between this high and the previous high, we could be looking at a touch of the old divergence here on the Stochastics and the MACD, but not so much on the RSI, unless we see a pullback, over the period of the next 45 minutes. So you'll know this before I do, technically, because it'll take me that long or longer to get the video sort of wrapped up, published, edited, published, and all the rest of it. But if we see that this is closed up above this area, and the RSI has managed to stay up in these regions, which it looks like it will currently, then you'd have a convergence there, but you've got divergence on Stochastics. It's not on the DMI really, if you're comparing between the high, but we've just crossed, so making that comparison by divergence and going back the way at that point, it's a bit too early to say so it's kind of going to be a bit more neutral in that sense. But we've also got this in chop land as well, the ADX down here below, having gone below, or no, just down to 15. When it drops down below 15, I think that there's potential for volatility. So if we see these things sort of crack a wee bit more, then maybe that would be the end of the story for that one. And I suppose a lot of drawings will appear back on here as I do this, but yeah, there you go. Maybe there's a case to be made that, I suppose, from some point here that we have what could potentially be another wedge on the go on the charts, just potentially, if we're looking at this divergence here in the MACD, depending on how all this all kind of shapes up over the next wee while, indeed it could be like that and still more or less wedgy, and that would be a kind of negative wedge. Haven't had in terms of the 4 hour time frame though, a bullishly divergent bottom coming in here just in and around this last, the lows from the 3rd and 5th in September and stuff like that. You can see these bullishly divergent lows. However, right, okay, there's more to the story, because this subsequent high then, which was lower than the previous one when we were still on the way down the way here, was at 10,450, was hidden bearish divergence compared to these other lows, just highs during this downward trend here, while we were putting in that bullish divergence between these two. So that was kind of a decent sign in terms of over the weekend, perhaps, getting some positivity. We've opened back up here then at the start of the week, and the CMEs have opened, and we'll visit those charts in just a minute. And that's given that an opportunity to close off that gap on the hourly. But is this going to burn out here, and will we just ultimately put in another higher low, for instance, compared to, say, these areas on a bigger time frame, 24-hour time frame. Could it happen where we just put in another higher low? And where would the top end of that higher low potentially be? Should we push past these zones just now before you could get even more sort of excited about things? But I suppose we can wrap up this story of the rise and wedge potential by doing a little measured move off of it and saying, if we did go up towards the top side and did the full thing, you'd be looking at 11,200 potentially. And if you do a sort of 60% area, it depends over the next wee while where that would be coming in at, but potentially just this sort of fuzzy line down a wee bit down towards that 11,000 area. Or indeed, if we go down towards the downside of this, then we've got this horizontal line in there that we kind of know of a wee sort of range area, and that would be visiting the bottom end of our previous sort of range again at that 10,000 point, or indeed just coming in at the median line of this channel here. Potentially at 10,350. So that would be the first target to look towards the downside. And the full measured move off the back of this would take you down towards this Fibonacci line here that we have, this green one. So I know it's hard to see in the chart. Going back over to the left, the green Fibonacci line is this golden pocket zone that we were talking about before in the past. So we had the movements from the top side down to the low side here in terms of the 25th of June 2019, all the way down to the low side there at in March, the 13th of March 2020. And then a 618 retrace off of this. Of course, we came in and did a 786 here with our highs, which is a potential sort of head and shoulder high that we talked about. That all happened there, and we dropped down and we did our measured move off of it. Some people call in this area sort of BART, if we look at it. But anyway, yeah, we talked about that in detail at the time, went through it all in great detail. So we came down here and having done up the 786, we came down to the lower line here again. Actually, no, that's the 382 on this Fibonacci retracement, which of course is from the December 2018 lows up to the June highs there. That's what that historic one was, and we come up anyway. So that's where that is. So there's significant areas in around those numbers anyway. Then being sort of down as far as the 9,700 or so area on that chart. So if we just dive over to a couple other things, there's other interesting things to take a look at here with the chart. Again, I know there's plenty of noise on this. Two things to look at. This here Fibonacci taken from our swing lows down there at the 27th of June all the way up to the highs on the 17th of August. Then we went down past the 236 and all that, but we broke down past the 382 and we did our head and shoulders move, came all the way down. And where have we been so far in terms of this one? Well, the bodies have been supported in at the golden pocket all that time, all the way along here. So if this were to then turn out to be a low at that area, going in again wick to wick, drawing it from the highs on the 17th of August or so down to the lows here on the 7th of September or so, then this Fibonacci over here on the right shows us a couple of targets, and they line up pretty damn neatly. With our pitchfork in the background there. So in terms of the pitchfork, the bodies were always supported by the extension to the pitchfork, and the wicks always were supported by the median line of the subsequent parallel channel extension towards the pitchfork, if you like. But just generally speaking, it was in around about the edge of the CME gap was where we were finding the support at, really, so like that's sort of as an analog. And of course, the bodies being supported by this the 236 Fibonacci retracement, which is drawn in from the March lows up to the 17th of August highs. I realize I'm going through a lot of information here at the quite quickly, but this for the broader term Fibonacci from March until August, this upward move, we've only come down and been supported by so far the 236 here, never really having broken it on the daily time frame yet. Okie doke. So and that's what's still below us, and it lines up. So anyway, the 236 on a movement back up the way from the Fibonacci drawn in from the 17th of August down to the 6th or 7th of September, wherever that low is that I used. This the 5th of September low probably, and then we're going up the way here, and it lines up perfectly with the pitchfork 236 at 10,423, the 382 in there at 10,800 10,800, call it the 50% there at 11,150, or 11,200 if you're looking at it a bit more sort of in towards the present, and then the 618 coming in there at about 11,650, and those are our three sort of targets towards the top side. Should we actually manage to push on past the 21 moving average here and the 55 exponential moving average, these two exponential moving averages, which have crossed towards the downside, which is obviously quite negative. And we'll cover this in more detail when we go over towards the CME charts, where they're not looking quite the same. But what we have at the minute is that this slope is on the slope on the 21 EMA has flattened out quite a bit. And if we were to come up and push past this, then this cross would undo itself fairly quickly as we move past the lower line of the pitchfork, or indeed the 382. Of that thing having already gone up past the 10,450 area. Of course, then in terms of the negative story, 10,450, or 10,420 actually, down to 10,200. All of that is going to be our big danger zone as we push down potentially past the lower warning line of the pitchfork. Yet again, having put in a lower high, having just simply come in and tested the 21 EMA, mimicking the story that we have kind of over here on Ethereum, having come up here, testing around at 21 EMA, then drop back down below it again. So there's all that sort of thing to be questioned, and we can keep an eye out across the markets to see how things perform around the world to give us an idea of things. And the SPY itself is up slightly today, as well in terms of traditional land. So that kind of ties together. Is that created a gap on there? Don't know if it has or not. Seems like it hasn't. No, it hasn't. Or it's been filled already. And but we've come up and we've tested the 21 EMA here on the 24-hour timeline, and it's the same sort of thing. Like, is Ethereum just one step ahead of the gang here or not? And will we see more of that sort of kind of a ripple down effect happen across the rest of the market or not? And if we do continue to if we got a full measure move off the back of the descending triangle here, or that we had talked about recently, that's maybe a little bit too much. Whatever there, roughly, whatever. Then, we're coming up and doing that and testing above the 21 EMA and closes and then movement towards the top side. Could see the price then go up and try to, say, for instance, test the 50 simple moving average, following on from the golden cross all the way back over here, having broken down past it here on the 3rd of September. So then, following on from that movement down, a retest of it and a failure then would perhaps see us then going on down the way with a potential of coming in and testing the 200 simple, or that we go up here and we recapture it and we just kind of get back to the sort of business as usual type thing as we saw between the period of 23rd of June until the 21st of July. So there's like another sort of month time. Of course, this was more sideways following on from sideways action. This has been more sort of volatile following on from more volatile sort of action there, where we created up this liquidity zone, I suppose, in the middle, subsequently then captured by that head and shoulders movement. Right, so over towards the CME chart, as you can see here, the 21 EMA and the 55 simple or exponential moving average have not crossed that yellow and green line. But there is a slight difference here in terms of like, oh, this is more positive. And it is, that's more positive, right? We're also looks like we could maybe potentially recapture this 55 exponential, starting to then, of course, subsequently dragging it towards the top side and stopping its downward curve, and maybe coming in for a cross here and that. That'd all be very positive as well. But what we have just above their heads here at 10,800 is, of course, the 50 simple, which is within touching distance and not so much within the touching distance here in the spot prices. So in terms of, somebody was asking me in the Discord, which ones would you put more weight on, or what's more positive or negative or whatever. This cross here on the spot prices is crossing here further down from the 50 simple moving average with like more hard work remaining afterwards, and we're looking over here at the CMEs and saying this hasn't crossed yet, so we could of course prevent them from crossing with less work. So that makes it important this way, but also the 50 simple in there as well, giving you that sort of scare. And of course then you could maybe wrap a rising wedge around this if we look down towards the lower time frames and take account of the fact that here in the stochastics and here in the MACD we see a bit of the old sort of bearish divergence potentially, should this actually ultimately turn out to be a local high. Now, if it doesn't, then maybe that'll follow suit with the RSI I'll come to this in a sec, RSI, and avoid having that divergence here. As we can see, it's going up fairly smoothly here on this one, but we also have we also have this question that remains to be answered here, where this cross has happened. There's above the 25, that's all very positive. This would almost be like, kind of almost could be a buy signal, if you will. When you see a cross and we're above the 20, then that's kind of, it can be, a signal for us, like we saw here with this negative price action. So that could get that positive price action cross here and be confirmed. But then this is on the 4-hour time frame. If we go up towards the 24-hour time frame, we can see that they're still negatively crossed, and this is still above 25 with that strength of like negative strength trend. So if we see rejection from here, it'd be continuation off the back of this, with just a simple lower high coming in here at any point along the way where any of these resistances are up as high as the sort of 10,000 or 11,000 areas and stuff like that. So that's kind of what's on the go at the moment. And we didn't get that bullishly divergent low over here on the 24-hour time frame, like you can see on the 4-hour time frame, where we had some sort of bullish divergence coming in down here on this wraparound area, and then it comes at the sort of the bottom end side of things, where we got supported by the CME gap itself, and then moved towards the top side, which could potentially then end up being a rising wedge, which is of course a bearish pattern as well, depending, especially if we see just that'll do in terms of all of that for now, right? And then we've got this below us, the CME gap, of course, the big one, the big daddy-o there, which could see the prices go down to that mid 9,000 area in terms of spot prices, which should be $1,000 off of where we are now. Okie dokie. So that would be the negative case scenario and the positive case scenario. There are reasons for both. Movements then beyond where we are now are going to be what you kind of need to see happen with that 10,700 area really kind of being captured and taken on the bigger on the spot pricing and whatever else, and going up then and really trying in at this 21 EMA here, and not just testing but actually capturing it. So movements up, you're talking like that 10,800 area, and it all kind of fits together in terms of where you could find support and resistance at. So be wary until such times as we've taken all of these things, in terms of potentially just putting in what could conceivably be a lower high. When we take a look at the RSI and we see this downward sloping trend line here kind of showing us then with all these lower highs along the way where we found the difficulties coming in at. So until really we break above the neutral line here, or until we get above, you see there's this sort of swing area here, just looking at these two lows where we had support previously, and then where we are just now, and this red line. So getting above this on the RSI, it would be positive for us on that 24-hour time frame, and that would all coincide with retaking these and then potentially uncrossing the 55 and the 21 and preventing a cross from happening just here. As you can see, the prices being above them currently, but we're right in there at that area. CME is going up towards 10,800, just another $70 up or so will be a test of that 50 simple moving average, and of course then a retracement away from there could look quite negative, with the potential set up for a rising wedge here, which is a negative pattern. So until that's kind of where we're at, right now in terms of the shorter term time frames and the longer term ones as well. So that's the whole story for us. Hi friends, I filmed all my episodes now. Actually, just thought I'd give you a quick update, just before editing and uploading this one, that we are right here at that cross. The rejection from the 750 area that we made it up to, as we spoke about during the video, would see us coming down here, the RSI rejected from that and pushing on past it. We'll see that being confirmed. The 21 EMA has been touched, and almost to 55 as well, so that you've got that kind of on the go, so you could have that rejection happen for us if necessary or not. It depends on how you want to look at that. The Bitcoin, over here on the 55, you can see that, has it been touched? Oh, it has got tested as well, has it? No, it hasn't. We're right in here putting this in. It depends on how this goes, over the next wee while. This is all very close to doing what needs to happen for it to be positive, and all very close to doing what it has to do in order for it to just simply remain negative. Where you get this kind of coming in here pretty close, but then rejected away from each other, or indeed crossing. That's what we're talking about with these two gaps, this two lines, here up above. So that's all possible happening. Again, you can see here where we tested 21. You came up here. If we don't close up above sort of 10, 8, 50 instead of 10,750, then, you know, not doing great, already down actually $50 from that point. But that's okay, of course, you know, but we now, you know, will we push on and achieve something, having done it without the divergence on the RSI, but with divergence on the MACD and the stochastics? Or are we going to remain in chop? So we need to see this pull the ADX above 20. So you need to see continuation over the next 4 hours, or it could just go back to being choppy land again and have its own issues on the go overall. We had a touch of hidden bullish divergence here on the RSI with this low recently. So that's hidden bullish divergence leading us up to here. But will it actually end up just fading off as we sort of fail to take the bullish zone, or will we actually capture that move towards the top side? We've done the 21 EMA test and we're just outside of this, you know, coming back into it again. Maybe that's positioned ever so slightly generously, but it doesn't matter. Coming back into this again, it's obviously negative, you know, moving down past this 6,666 area, moving up past the 7,777 area, very much positive. That's what we're still looking at. You can see it yourself on all the charts and all the details that we've spoken about quite clearly yourself. I would recommend checking it all out. Then yes, so yeah, cool. Okay, thanks very much for tuning in. Catch you next time. Remember, giveaways, all the other videos. Check out Ethereum as well. It's a good video and good stuff. See you then.